What's your financial goal?
You want more money? Turn what you know into dough. Start hanging out with the people who have it. You create wealth on your own terms. It is not only your rights, but your duty to build wealth.
You are fiscally fabulous.
And it's time to enjoy your legacy.
You're listening to Fiscally Fabulous with Dr. Teresa R. Martin, Esquire, a podcast that aims to provide you with the tools, guidance, and encouragement you need to build your wealth, enjoy your wealth, and leave a lasting legacy. Dr. Martin is an accomplished attorney, speaker, business consultant, and real estate strategist, an all-around self-made success who provides highly sought-after expert consulting in the creation, growth, and maintenance of generational wealth.
So market analysis is brought up to be this big, grandiose thing with all these different checklists and spreadsheets and all this stuff, right? And it becomes overwhelming, right? So today, we're going to break down something that scares a lot of beginners, and that is this thing called market analysis, right? What we're going to do is we're going to do it without talking about spreadsheets, and we're not going to be doing complex math, and we're not going to be talking about paid tools and all this stuff, right? We're going to keep it real, we're going to keep it relevant, and we're going to keep it fiscally fabulous style. And because I believe that you don't need a lot of money to invest wisely, you just need to know where to look. Right. So what we're talking about is Smart Start. You see, I got that TM thing and it's like the Teresa Martin thing, but that's really my little 5 little things that I put together because I believe that we need to keep it simple. And I want you to focus on picking a profitable place to invest, even if you're just starting with a little money, $5,000 or less. Right. That's what I want us to look at. So let's look at what market analysis is. Right. So when you think about market analysis, it's your profit. We got to look at the profit, and the profit is made when you buy, not just when you sell, right? Because you should be making a profit when you sell, right? But it's not just when you sell. You got to look at your profit when you go in for the buy. And just because it's cheap doesn't mean it's smart, right? Cheap doesn't equal smart. Right. And most gurus, when you go to courses and things of that sort, they will tell you to find a deal. That's like the first thing they say, find a deal and figure it out, right? But the best deal in the wrong market is still a bad investment. Would you agree? Or put another way, if you have the best strategy, but you're in the wrong market, it won't even matter. It doesn't matter. So your market determines your profit, your risk, and your long-term wealth. So for those of you who are starting out and you have limited capital, choosing the right market is the first place that you're going to look for, right? And you're going to first look for that wealth decision. And the wealth decision is, what market am I going to be in, right? Where do I need to start looking? So these are some of the things that you want to pay attention to, but you want to do it the smart way because you really want to make sure you're able to leverage the market that you're going to go into. And that's going to be your biggest decision maker. And like I say, that's your wealth decision, right? Your market. So the simple question that most people ask, right? I'm sure you've asked this question if you thought about investing. You've asked the question, is this a good place to invest? Or where is a good place to invest? And people will give you their opinion, right? And so if you go by their opinion, then how do you know how they did their research, right? So let's simplify it, right? So forget about all the jargon and all that. So I'm hoping that at least you're contemplating or you're thinking about what I'm saying, or you have some paper that you can take copious notes, because when you're evaluating a market, just ask yourself, are people moving into this area or away from this area, right? Are jobs growing or are jobs disappearing? Are home values stable or are they falling? Because if you can answer these 3 questions, you're already ahead of a lot of investors. Because a lot of people don't take their investing serious enough to just ask those basic questions, right? And you look at that, now the tools, how we find this information and all that, we'll talk about that. But just ask yourself those questions. That will answer a lot. Are they people moving away or are they moving into the area? Jobs growing or disappearing? Home value stable or are they falling? 3 simple questions, right? So next time you want to ask yourself, is this a good place to invest? Take that into account. All right. So let's talk about the SMART method, right? So introducing the SMART START method, right? And it's just simple because it's the first letters of the names. So supply and demand, right? We have a movement of people. We have affordability indicators. We have the risk factors and we have trends, right? So this method is the 5 simple points that you need to look at as your North Star, right? You don't need 20 charts. If you can answer these 5 categories, you can decide whether your market is worth your money. Is this market worth putting your money in? And you don't need an analyst hat, to figure this stuff out. You can just ask yourself basic questions. So what is the S? So the supply and demand, right? So are people moving into the area or out, right? Migration equals rising demand. Outbound migration it might be equal to a caution zone, all that, right? So supply and demand is where everything starts. Are homes sitting on the market? Are the apartments filling up fast? Is demand higher than supply? If that's true, if demand is higher than supply, investors win, right? So that's just basic, simple economics of it, right? Supply and demand. We're going to look at the supply. We're going to look at the demand. That's where we start, okay? Then we look at the market, okay? We don't want to invest in ghost towns. You don't want to find that, okay, this is cheap. Remember we said cheap don't always equals smart. So this area is cheap. I can buy a property for $500, right? But is it a ghost town? You want to really follow people, right? You want to find out whether it's U-Haul data or the census. The movement tells you where opportunity is going. So if you're following the people, this will give you an indicator if, this is going to be an emerging or declining market, right? And we'll go into that later as well. But these are just the basics, right? Just simple questions that you probably ask yourself anyway, right? But this is just putting it in terms of, okay, basic stuff. Before I even think about going into this market because my family lives there, is this a place where I really want to put my investment dollars, right? And the next thing we want to look at is affordability, right? Because the affordability tells you how long tenants can stay, how strong demand is, and how likely a property is to stay cash flowing even when it's a downturn, right? These are some of the things that we want to look at. Affordability. Is this an area that tenants is going to be able to afford to stay? We know that economics are changing. The economies are changing, right? People are moving from different places. Some people are leaving the states altogether and going international. So we have to look at these things and how it's going to affect our investment decisions, right? So simple, affordability, okay? Now we want to look at risk factors, right? We don't want to just look at ROI, right? We don't just chase ROI. Study the risk in that area. You want to ask yourself, is this a place you'd feel safe walking after dark? Back in the day, this is what we asked ourselves, right? So you went to driving for dollars, or you went to look at an area, and what you would see is I would go during the day, see what that looks like, but you also want to take a visit in the evening, and then you want to take a drive-by at night. Is this an area where you feel safe walking after dark? Because if not, tenants may not want to live there either. So simple things, right? Risk factors. Some people look at the crime rates. They call it crime rates, but I like to call it risk factors. So might not be a lot of criminal activity, but it may just be risk. Like a lot of people don't like a lot of people hanging out at night. We still have in some places, even in Long Island, you still have curfews, decibel levels and stuff like that. So you want to make sure that you understand the market that you're going into, especially if you have limited funds. You got to make this your wealth decision, right? You're going to make this decision like your wealth depended on it, because sometimes it may, right? All right. Trends. So what do we look at the trends? So in trends, you want to look at if it's trending up, trending down, is it stable? You want to look at 3 to 5 year prices, rents, jobs, and population. But one of the things you want to pay attention to, because too many investors just look at last month's headlines. Okay, they're looking at the news, they're looking at the headlines, but smart investors look at 5 years of movement. Remember, looking at the movement of people, looking at the movement of the trends, what's going on in this area, right? Because that's where the real story lives. So if you start looking beyond the headlines and you start looking at the movement, this is where you can find the real story. And that's going to be important when it comes to making your decisions, right? So that's some of the stuff that we want to look at. But the biggest thing is, how do you define the declining market versus the emerging market? Let's talk about that, right? You don't want to guess, right? You don't want to guess. You want to know the signs. A declining market, and then this is textable, right? A declining market steals your time. An emerging market builds your wealth. Okay, that's what you want to pay attention to. So if you're going to go into a declining market, just understand that you don't want to guess this thing, right? You want to know the signs and where to look. So what does the signs look like? Okay, population. You want to look at if major employers are shutting down. When we used to invest in Rochester, when Kodak was shutting down, right? That's a big sign, right? You want to look at high vacancy rates. You want to look at, like I mentioned before, the 2 or the 3 to 5 years of price decline. Are more renters leaving than moving? What about the tax auctions? Are they filling up with repeat properties? Because if you see these patterns, slow down. Take a moment of pause, maybe, right? These are signals that demand is drying up. You may find a cheap property, but cheap doesn't mean profitable, right? That's why I said cheap doesn't equal smart. So it doesn't always mean that. So if you see some of these patterns, take a minute, slow down, even if you can get the property for $500, right? Because there might be a reason for that, right? So that's some of the things. But emerging market, on the other hand, right? You're looking for new development. You're looking at job creation. You're looking at infrastructures. You're looking at growth. You're looking at increase in rents, rental demand, right? Because emerging markets are where, the wealth is made, because you get in while the values are still affordable. And then you ride that appreciation wave, right? You ride that wave. You just ride it, right? It's a beautiful thing when you can do that. Right? You want to pay attention to some of these signals, because when you ask yourself, is this a good area to invest? These are some of the signs. Looking at the smart start, those are some of the things that you want to look at when you're looking at, should I invest in this market? Should this be something I'm interested, but maybe I need to do a little bit more research, because you might need a little bit more of that information. But when you're investing, you'll get a performer anyway on the deal, or you'll create the performer yourself. But these are just some of the things that you can do if you're not an analyst, right? You don't know how to pull the vacancy rates, and you don't know how to do all that jazz, right? But this is a start where you can start, because some tools can give you this information. But what if you're a tax lien investor, right? What things would you look at if you're a tax lien investor? The same thing, because for tax lien investors, you're not just buying paper. You're buying potential real estate if that tax lien actually matures, right? Because one day that paper may become a property. That's why some people invest for the tax liens and they just want the money. Some people invest in tax deeds because they just want to go after the deed. And then there's some people who they want the redemption period, so the redemptive deed, right? So they do want the deed, but they want to give the homeowner time to do the redemption, right? But one day, that paper may become property. Okay, so you want to look at areas with resale potential, not ghost towns with no buyers. You want it in a place where people want to live, and not a place where people just keep leaving, right? So declining markets, this is what you need to consider. Declining markets equal more tax delinquencies, but higher risk. Emerging and stable markets equal better exit strategies and resale if the property is foreclosed. So what do you want to prioritize if you are a tax lien investor looking at markets? You might want to prioritize owner occupied homes. You may want to prioritize affordable areas with consistent tax rolls. You might want to prioritize counties with economic activity, not abandoned zones and things of that sort. That might not be where you want to play, right? So if you are a tax lien investor, that's what I would, if I'm looking at markets and market analysis, I would probably look at data that gives me that, especially if it means that I may get the property and if I want to keep the property, right? Because if I get it, I just want to just sell it as is to an investor, that's fine. But that investor might want to know, should they invest there, right? So you still got to look at these things. So you buy a tax lien like you're going to hold it, even if you don't plan on holding it, right? So let's look at some free tools. Let's talk about that. Let's talk about some free tools. Some free tools that's out there. You have in the housing, you have Zillow, you have realtor.com, and you have Renometer. Renometer, if you go on, that's for rents. Like you can pull rents in the area, like average rents and stuff like that. For the job market, economics, you look at BLS.gov, you look at city data, you look at the city economic dashboards. For the crime, you look at Crimeometer, local police, population data, you go to the census. U-Haul has a U-Haul index, you can look at that. And tax liens, you'll go to the county sites, you'll look at tax sale resources, areas like that, resources like that, because you don't need a $997 course to find this information. All right. Now, if you've got a course that's actually helping you and walking you through how to do tax liens and implement tax liens, that's different. But to just buy a course to show you where you find things and everything like that, maybe not, right? So you don't need a paid platform to get started. The real win is knowing what to look for, and now you do, right? Now you have the basic information on what to look for, so now you can get that jump started, right? These tools are free and powerful. Obviously, on some of these tools, they have free, but then they have some paid tiers and things of that sort. But you can start with the paid, start with the free, and then you can move up if you need more information, right? Because free is always limited, right? And then also you want to think about being consistent, like being consistent with everything that you do. Just be consistent and compare apples to apples, not apples to oranges. It has to be comparable, all right? These are some of the things that you want to make sure you pay attention to, because when you're looking at markets, it gets very overwhelming. It's a lot of information out there. That's why if you're in residential, you're not looking at commercial resources, things like different things that you would be looking at NOIs and things of that sort for commercial. You're looking specifically for residential, but just be consistent. That's why I said apples to apples, but not apples to oranges.
For many women entrepreneurs, the struggle is real. We arose becoming stronger with every fight. Wealth is what we built from that together. A wealth of resources, a wealth of knowledge, and a wealth of powerful businesswomen. When you are ready to achieve financial freedom and become fiscally fabulous, call. It will not be wealth that empowered your success. It will be this call. EnjoyYourLegacy.com, 646-437-7139.
And start by looking at a zip code. That's how we're going to do it. So we're going to do one zip code at a time. This is how you build your analysis muscle, right? Don't just guess, test it. Okay? So start with a smart start in your own city, your own town. Choose a zip code. You want to pull the rent, the job, the crime, the appreciation, the population data. You want to pull that, and you get that from those resources that I just shared with you. And then you score it on a scale of 1 to 5 for each one of them. And then you ask yourself, would I invest here? Don't overthink it. We have a tendency, all our analytical people, we have a tendency to overthink the process, right? Practice in your own backyard. Even if you don't invest locally, it's the fastest way to build your confidence. Start with areas that you know, and then grow out from there. But this is a simple step that you can start with so that you build up that analytical muscle. And like I said, don't guess, test, right? Just test it out. See what it looks like in your own city, and then get good at that. Like you go out, you practice your pitch on your family and stuff like that. Same thing with the zip code and the analytics, right? You want to practice your analysis in your own market that you actually know where you live. Next, all my beautiful investor agents out there, right? I just want you to know that if you are an agent, right, you are a real estate agent, real estate salesperson, you're already doing market analysis. You just haven't called it that, right? Every comp, every market report, every client conversation is a window into what's happening in your area. You have boots on the ground. So what you want to do is use that insight to build your own wealth, not just for your clients. That's the beautiful thing about being an investor agent. You already have the tools, you already have the resources, you already know how to do the research, right? All you have to do now is use it for your clients, but now you also use it for yourself. A beautiful thing. And then for my investors, if you are a new investor specifically, right, you don't have to go it alone. A regular agent might sell you a pretty property, but an investor agent helps you find the right deal. You always want to use an investor agent. They'll talk cap rates, not countertops. They don't care, right? You don't care about countertops. You care about your cap rates. So surround yourself with professionals who understand the investor's journey, because they're walking that journey too. They're investing too, or they're aspiring to invest too. So these are some of the important things that you need to look at. Simple. But sometimes those things that's simple or easy to do is the simple and easiest thing not to do. Because we get caught up. People sound sophisticated because they can talk cap rates and NOIs and all these different things. They sound sophisticated, but they don't know what they're doing either half the time, right? They just spitting out what they heard in a meetup group or something. So now you're going to have the right information that you can at least start. And you're going to start in your local area with your local zip codes and practice your market analysis muscle. You're going to work it out. All right. Now, how do we build it together? Obviously, you're already a part of RIA NYC, or you're in the community somehow, or you're coming back to RIA NYC. You're here. Okay. You're in the community, right? So whether you're an agent learning to invest or an investor looking to scale, you are in the right place. What we want you to do is we want to learn together. We want to grow together. We want to build it together. We have investor agent masterminds. We have the marketing lab. We have the tax lien workshops. We have strategy calls. We have marketing and tech. We have so many resources within the community that can help you, wherever you are, starting or scaling, right? We have everything in between. So what we want you to do is just get in where you fit in and just use what you already have. Let's reallocate some of those resources so that we can throw it into maybe partnering with fractional resources, partnering with tax liens, partnering in lending money. I don't have a lot, but I got about 5,000 that I can lend, and I'll charge you XYZ amount of interest, and you build it out from there. There's plenty of ways that you can get into this real estate game. It doesn't always look the same. So that's really what I wanted to share with you on today.
Hey, you, right there watching life slip away day after day. Are you overworked, underpaid? At RIA Mastermind and Training, we are looking for a particular woman. Focused, interested in real estate, investing, and building wealth, she's more than a dreamer. She's already called the number at the bottom of the screen. What she has yet to discover is she just changed her stars. Welcome to RIA. Now you can. RIANYC.org, 646-437-6003.
If you have any questions, this is just the beginning, right? Now you have a simple method. You now have a map. Now all you have to do is just go out, start building that legacy, one smart market at a time. And you do it. If you have questions, you ask. If you need a partner, you ask. If you're going into a new market, ask because someone may have gone into that market, may have moved out of that market because for whatever reason, changes or whatever have you. So you want to start asking questions of people who've already been there, done that. They may not have invested in that market, but they probably spent a lot of time investing time into researching that market. So a lot of times we just have to ask the right questions, right? The word tells us we have not because we ask not. Let's just start asking the right questions. But more importantly, we want to ask the right people, right? We don't want to ask people about buying a house when all they've ever done was rent it. We don't want to ask someone about how do you do this business when they still have a job and haven't started their own business. Then you can ask them about what do they think about this idea, what do they think about whatever, but they can't give you business advice if they don't have a business. They can't tell you about home buying or should you buy in this area because they've never purchased in that area. You see what I'm saying? So you got to ask the right questions, but you also got to ask the right person. So that's what I have. So what questions do you guys have? What questions do you have of anything that I shared? It wasn't a lot, it was simple, but you may still have some questions. What questions do you have? Let's get some questions answered.
And you are able to unmute yourself at this moment.
Not a question, Dr. T, but just a comment.
Sure.
It's refreshing to hear someone else who explains and put emphasis on market analysis. And most of the things and the resources that you mentioned were the same things I tell my clients. So that was good to say that you're using some of the same things. So I just want to say thanks for actually shedding some light on this, because market analysis is very important. Once you get this going, then really that's half the battle.
Awesome. Thank you. And that's encouraging coming from you because a different strategy, right? Most people talk about market analysis when you're talking about it from a standpoint of rentals, right?
No,
People are going in, buying whole. Right?
No, I tell them to do the same thing, because sometimes you plan for one exit and things happen, right? So even when you said you might not want the property, but the person you're selling it to, if all of a sudden, just think about it, if you're selling this property to an investor and you can give them all that information, guess what? They're coming back to you, right? So that's part of building a relationship and differentiating yourself from the masses. So yes, thanks for the presentation.
Oh, awesome. Thank you so much. Very encouraging. Anyone else? Any questions and or comments?
I'll just make a comment, Dr. Martin, that I thoroughly enjoyed that SMART breakdown, because there's so much information in that sometimes you can get something for real low, but it could be because everybody's moving out the neighborhood and crime is high. And so it's key that when you're getting something for low, yeah, that's great, but what else is going on? And so doing your research and really looking into things to see if it's a great property, because like you said, buying low and also making sure you sell high. So all those are key factors, doing your research, looking at the crime rates, going by the property during the early morning, middle of the day, and late at night.
That's the key. I'm telling you, that late at night is the big one.
Yes, it is. Yes, it is. I learned. So thank you for that.
Thank you for sharing. Thank you for sharing. Anyone else?
I just what the whole presentation was good, but I really liked how you related certain things. And when you mentioned about talking about cabinets versus or countertops versus
cash flow versus countertops.
That's key, because that's such a different approach to what you're actually doing for the investment, right? You can buy a property that maybe can satisfy a portion of the portfolio, but does it actually check all the boxes for what you're actually looking to do? And I think that's an important distinction when people are going out to invest, especially even I'm thinking about it for people who may use real estate also from like a strategy perspective for like their taxes. Like real estate's one of the biggest tax benefits because of the deductions and credits that you can get. but does it make sense on paper and for your overall portfolio? And so that's where you want to work with someone who's actually approaching it from that standpoint. So that line in itself is, I was like, oh, that's good. Like in terms of just how to think about it. Like, you can have someone that can find you a property, but is it the right property for what you're doing? That
Right.
was really, I like how you put that.
Right.
Was good.
And I say cash flow, but it was cap rates, right? So cap rates.
Yeah,
versus
right. It was cap.
right?
Yeah, I was like, yeah, that was
Right.
like, oh, write that down. That's good.
But,
Cap
but
rates with
cash flow too,
countertops.
right? Cash flow too.
Yeah.
Cash flow, cap
Yeah.
rates, and versus countertops. So we just say, right? But the biggest thing, like what you said, Lorraine, is really key, because a lot of things where rental market analysis is always going to be good, because even when you do mortgage notes, you're doing your tax strategies. If you're going to be buying a rental property to throw some tax benefits and stuff like that, you want to target markets that have a high rental demand. You want to target markets that have a low vacancy rate. You want to target areas that have positive rental trends, like what we talked about, the trending data. And definitely you want to ensure that you have at least consistent rental income. When we're looking at those demographics, you still want to look at populations. Nobody like really pays attention. Are people moving in or going out?
Because that affects your appreciation too, right? Is the value of the property going up? The people are coming in, your property is going to appreciate, which means you have more equity now. So then maybe you can do the cash out refis or whatever it is to then go get another property, right? Buying that one can potentially equal to so much more if you're buying it right or at the right price. And
awesome. Yeah, it's so this is where this is for me. I tell you, I don't like numbers. I don't like taxes, but I like the numbers on the other side when you talk about some income and helping me with my growth, because economics. Who liked economics in school? Like, come on. Like, who did, other than Paul? Paul probably loved it. Like, he probably loved it. But who likes economics? Like, that is like sleepy time. And same thing with taxes for me, like the tax code, other than Lorraine, like sleepy time. But economic growth, we do have to pay attention to it, because with that strong job growth, that increases wages. We want to look at the low unemployment rates, because what is that? That's ensuring that we have a stable economic environment that's going to support our investment. So all these things are important. And then I also, what I didn't talk about, but this is stuff that that's why you got to ask the questions, is it investor friendly? Some places don't like investors.
Like New York.
Right? Like New York.
Now.
Right. So you want to look at those areas. Now, obviously, that wasn't in the 5, because that's like extra, like a subcategories of stuff. Just like the property evaluation. We're talking about markets. We're not really going into specific stuff, but when you look at investor-friendly markets, okay, you want to prioritize areas that have favorable landlord laws if you're going to have a rental, right? It's pro-tenant. I mean, you can still go there, but just understand what that means, right? You want to, so for me, if I was going to be landlording, and I'm not, right, because I'm paper, but if I was, I would look for favorable landlord laws. I would look at reasonable eviction processes. I would look at manageable property taxes, right? Because you want to protect your rights as an investor. So these are some of the things that we talked about, just the 5 areas, but that goes into so much more than just the 5 areas, but that's how you start. That's how you ask the question, is this a good market to invest? You start that question, and then you exercise that analysis muscle, like I mentioned, and start with your own zip codes. And then after you say, okay, ask yourself, would I invest here? Is this a place where I want to invest? And then the answer is yes. Now you know why. Then you start going deeper into some of those other tools and resources and stuff that I showed. This is the only part that I like as far as the analysis stuff. And because I want to know, if you're going to put an offer in, shouldn't you just do a little basic market analysis first before we start getting to the property? I got to look at the market first. Then I'll look at the property. But if this is a market that I'm not going to be in, why do I care about the property? Right? So I think sometimes as investors, we just get it backwards. We start looking at the wrong thing for the wrong reason, and that's where we get stuck. So thank you for that, Lorraine. I really appreciate it. Any other questions before we end? All minds are clear? Awesome sauce. Thank you so much for just jumping on, getting this information. I really encourage you to study your market before you invest or reinvest, right? You may already started in an area and this is your market play. But since we have shifted in what's going on in the economy right now and things may be affected, maybe you might want to look at doing another analysis of your market and look at other markets where it may make more sense to invest your time, energy, and dollars. Okay. So thank you guys so much for just participating with us on this call. It really means a lot for you to be here, and prayerfully you will come again when we have our next topic. Thank you guys so much.
This has been Fiscally Fabulous with Dr. Teresa R. Martin, Esquire. If you would like to learn more on how you can build generational wealth and leave a lasting legacy, go to www.enjoyyourlegacy.com and be sure to subscribe. Thank you for listening. Until next time.